Can you hear me? Please, can someone just type in the question that yes or okay, so I know that you could hear me okay. There's a few issues that I had with technicals. Okay, wonderful. Thank you very much, Tando. Okay, so first of all, my name is Simon, and I'm substituting today for Daniel. He asked me to be with you because he didn't want to miss this for you guys. And I'm happy that I have this opportunity. So we're gonna have questions and answer session, and hopefully we'll make it practical, we'll make it useful and educational. Okay, so let's move on. Before we go any further, of course, there is disclosure, and everything we do here, it's purely educational. You can find the whole document at avatrade.com. Okay, and we'll do questions and answer. Pretty much that's what it is. I'm doing my own webinars. I haven't done this one. Hopefully, I'll be able to be as good as Dan, and we'll answer your questions, and we'll give you information that's needed. So the agenda will have common questions that usually there are. We have dynamic questions as we go. And I'll share with you some links, information, and other things that you can use, and so on. So again, I apologize for being a few minutes late. There's some technical difficulties. I had to move computers around. Okay, so let's start. Who will start with the first question? And these are the questions that I guess you had last time with Dan. How to use AvaProtect. How do I know when the important events are coming? How can I improve my fundamental analysis? What's the best amount to start with? And what's the difference between stocks and indices? Okay, thank you guys for confirming. I have another confirmation that you can hear me and see the screen. It's great. And let's start with the questions. I will be happy to do that. Go ahead, guys. I'm going to try to copy and paste the questions over here the same way Dan is doing, and we'll try to go into the explanations. So we have quite a few people on the webinar, and I hope that we'll have an active webinar, and the questions will be something that is in benefit to the people or the person that's asking the question, and definitely to others that are participating in the webinar. By the way, the webinar will be recorded like most of the webinars, and you can always go and revisit it and so on. Now, you don't need to raise the hand. I see some people are raising the hand because it's very simple. You just type the question the same way a couple of people here responded to my question about if you could see or hear me. Same thing, just go ahead and type the question in, and I'm gonna announce that question. Okay, the question someone is asking, I don't have my number card yet, even though I applied. Okay, I'm not sure the question. I think your question is about starting a live trading. You can either contact customer service, or if you have the account manager, apparently probably not, because you didn't start the trading. So customer service would be great. Talk to them as far as turning into live trading. I think that question, even though it's not clear, I think the question is about you depositing using the card, if I understand it correctly. Okay, let's move on with questions, guys. Let's go ahead. Anyone? Okay, wonderful. So let me just copy this question. Okay, you're welcome, Manoj. Okay, so the question is, I just want to, I don't know how to copy it, so I won't do it. The question is, I just want to I guess you missed the word, know the importance of, okay, I just want to know the importance of understanding the spread when trading. Okay, great question. So the spread, and let's go to the trading platform. Okay, the spread is the difference between the buy and sell. So if you let's say you're looking at, I don't know, the first asset just came out. Okay, that's interesting. Okay. Sorry about that. Okay. So the spread is the difference between the bid or offer. There are a few ways that traders refer to it. The one on the left is the bid. It's what somebody is willing to pay. So that's called the sell. If you're willing to sell, you're selling to the bidder. And the buy, that's the price of offer. That's what's being offered at this time. So if you see that the bid price is 37.2 and the sell is 38.3. So that's the different price. The spread is the difference between what the buyer is willing to pay and what the seller is willing to sell for. And the spread is always moving. As the instrument moving, there's a spread, because if there was no spread at all, which I really don't know how that works, any instrument has a spread, even a tiny spread. If you go to stocks, normally if you go not to CFD but live stocks, there's always a spread. The minimum spread is a penny on the regular stocks, and some high rolling stocks, the spread could be 5 cents, 10 cents. We're talking about US stocks, right? So that's what moves the market. There's always dynamics in any instrument, any market. That's the two things: the sellers and the buyers, the two camps. So the seller is willing to sell a certain price, and the buyer is willing to pay that price. So that's why when you see at the end of the session, sometimes around 5 p.m. New York time, on the Forex market, especially in the currency, you see the spread widening because activity slows down. The bank's having the recess and so on, and then it goes back to normal. So, and that's, I guess, that's the understanding of the spread. There's nothing much actually to understand as far as the spread itself. Now, there are other aspects when you trade, and you trade assets with a larger spread. Like, let's say if you trade something like exotic pairs, you might see spread instead of 1 pip or 2 pips. You could see 10, 15, 20 pips. So that's when your question kicks in as far as understanding. If you do trade those assets, so immediately when you're entering, that spread already giving you, okay, for instance, here's the Euro GBP. So you have a spread of about 2 pips, right? So if you enter the trade here, you immediately will be, depends on the size. Let's say if you go and you open, let's take euro dollar, for instance, for easier calculation. Okay, so if you were to buy a euro dollar over here, immediately you'll be down on the one lot. The difference of spread, it's about 0.9. So $9 minus immediately will be unrealized P&L. If you were to enter I don't know, USD Turkish lira or USD Mexican peso, your immediate loss or unrealized loss would be much larger. So the instrument needs to move much more just for you to see the break even in your trade. Okay, I hope that answers your question. Okay, do we have squeeze momentum indicator? I'm not, I tell you the truth, I know a lot of indicators. Squeeze momentum indicator, I'm not familiar with it. So you can check if it's available, but I haven't seen it. I'm not sure actually what it is. I'm really sorry about that. Okay. Next question, guys. Really don't know how to copy this. Okay. Okay, guys, let's move on to next question. Can you please try from indicators as I was trying to see? Okay, no problem. We can try it here. If you go to studies, and I guess you would look for, if you're looking for moving averages, so you just you can scroll to it, or you can just type. So your questions here, squeeze. So you could see nothing here, or you can just scroll to letter S, and on the letter S you have starting here, staff, slow, SMA, simple moving average, smooth, standard deviation, then Stark, deviation, and swing. So again, to find the indicators, you come here to studies, and then you have to choose one. Let's say simple moving average. You double click and it comes to the window, and then you can put the length. If you, let's say, if you want to use 50 simple moving average and you want to mark it with blue color, it's very customizable. So the moment you click OK, it comes right here and it stays. Now to remove it, you just come back here, close, and then save, and it's gone. Okay, so as you could see, we didn't find the squeeze momentum indicator. All right, Manoj, I hope that was useful. Now, when is the best time to sell or to buy? Tango is asking. Okay, I'm really sorry. I don't know how Daniel is doing it, but I'm not able to copy that, to copy the questions. Okay, so the question is, when is the best time to sell or to buy? Okay, when looking at indicators. Tango, looking at the indicators in the decision to buy and sell, that's already secondary. And I just want to give you a little bit information, not to brag about it, but just to share with you my experience. I've been trading for almost 23 years. June will be 23 years since I started in June of 2000. And I've used many indicators in my life, and I've used many strategies in my trading career. And you realize that indicators, again, we can discuss it, that the indicators are right or the indicators are wrong. Is it primary? Is it secondary? But in your decision, first of all, sell or buy, it's important to understand what's happening in that instrument. So, for instance, let's bring up one of the indices, right? Let's US 500. One second. Hot. Let's see what's okay. So if you're looking now at US 500, okay, and it's a good question that that Tango is raising. Now, let me ask you, Tango, what time frame are you using to making your decisions and whether to buy or sell a certain instrument? If you can answer that, please. You ask sell or buy. How do you make your decision? When is the best time to sell or buy? Okay. So again, for this question, we can spend weeks talking about it, and I'm not 100% clear. You know, if you just want to do it based on the indicators, and if that's the case, and while I'm talking, you can clarify a little bit your question. But indicators, again, if we stick to indicators, there are different opinions on it. Some like to use the moving averages, and when it hits 50 moving average, or 100 moving average, or 200 moving average, and then there's certain things they call golden cross, that when 50 moves about 200, it's a buy signal, and when it does the opposite, when a 50 moving average moves below the 200 moving average, that's the sell, something called dead cross. So again, if it was so clear and so simple, we would have a formula to do it. So there's no formula. So in my opinion, again, from the experience, first of all, you need to find out what's happening. First of all, you need to find out in general, is it worth buying or selling, first of all. So in that, the approach of the trader, successful trader, would be the following. Would probably start from a monthly or weekly chart, and to see, we're watching now S&P 500, okay? And as you could see here, it's a fourth consecutive week that we're selling, okay? And if you look on the daily chart, and you could see that we keep on making lower lows and lower highs. So there's a saying, the trend is your friend, right? There's a saying that the trend is your friend, and in this case, you want to stick to it as a trader. There are more chances to make money on the downside on the downtrend. So that's already a key point. That's the main thing before determining, before even looking at indicators and seeing, okay, the instrument is really, really moving lower. I might want to see if I make money to the downside. And then you can start using the indicators. You can move to a smaller time frame, a 1 hour time frame, for instance. Okay, and here we can try something. Again, I'm not suggesting any indicators here. I personally have a specific approach to indicators. I don't use them a lot, let's put it that way, but that's something that I do. So for instance, some people like to use Bollinger Bands. Okay, so if you already determined that the trend is down and you're looking for selling opportunities, as you could see here, if you take a 30-minute chart or 15-minute chart, so you could see every time it hits close to the top of the Bollinger, it's selling. So if you, but again, you determine, you already did your homework, you realize that you're looking to sell. Take a look. Every time it hits the line, it's selling. We almost hit the line here, we're selling again. So that's one of the things to pay attention. Also, you can use moving average, but it's very important to determine you're a buyer or a seller, because a lot of times, unless you're a scalper, scalpers do it both ways really quickly, in and out. It's a tricky game. It could be profitable, it could be losing. It depends how good of a scalper you are. But if you're a normal trader, or day trader, or short-term or mid-term trader, or even swing trader, or even investor, you want to be able to realize or determine which way are we going, and then you can apply indicators as support to it, and you can use any other. Again, I'm not suggesting. I'm just trying to think what other people are using. You can use stochastic. And others to determine and so on. So this is a partial, kind of a small and a big answer to your question. You determine what you want to do first based on the longer term trend, and then you can use indicator. This is one of them, like Bollinger's Bands. It's already have settings for you, and you can try to follow. Again, nothing works 100%. But even if you're not using the indicator, so you need to determine which way is the main trend or prevailing trend is going at the moment. Okay, so that's just an example. Okay, it says next question. Samson is asking, watching the trend, how many green candlesticks should show up? Okay, 1 second. I'm trying to see how I can actually. Okay. So watching the trend, how many green candlestick should show up so that I could enter? There's no such thing. There is something that called candlesticks analysis, or you can actually study it, but let's just bring the chart. So again, it depends what the time frame is. They're different things. Some say it's 3 consecutive candles and then it will turn around. There's not really, candle study is a separate thing, and I'm not gonna go into it because it will take hours and days to explain. And again, even if you learn it, you can learn the candle things. Doesn't mean you're gonna become a good trader. Okay, there's no such thing. Because I mean, you could be speculative. You could say, okay, 1 candle, 2 candle, and then I'm sorry, there's no such thing, and I'm sorry to disappoint you. You can learn the candle patterns and the candle, the way of trading based on candles. Some people manage to make money, others are not. It's a combination, and I think the main idea, and again, I'm just going to show it to you. The main idea, even if you have the line, okay, or any or bars or anything else, the fact that you're watching the candles or other things, it's not going to change the quality of your trading. You need to learn to understand the idea of trading on the price action. And I'm just going to give you an example, right? Take a look. One of the best way of determining what's happening in the instrument, let's use candle. Most of the people use candles, okay? But again, don't confuse yourself. It's good to learn candles. It really works, but nothing works 100%. So I just want to, if we're already using candles, I want to share with you a few things that it's important to see. So one of the ways of really doing technical analysis, and I do it once a week. I also have my webinars, weekly trading plan. I know some of you that are here are watching that as well. So doing homework, it's very, very important. So the way I do my homework, it's a very simple way. I try to really see the big picture. So I just go left and I start really paying attention. So I put this line here. Why? Because we really were selling and we stopped right here. Okay. Then I tried to put another line somewhere else and to see what happened. Then right here, from here, this was the first stop. We came right back. So I know this is the channel that the instrument was trading. And we're talking about, this was back in October of last year. It's not important now, but what's important that the history repeats itself, right? So as you could see, it makes sense because when it bounced off that resistance, it came right back to support, pretty much to the penny, besides this fake out that it came right back. And now take a look what happened there. Then we were fighting this level again, and then we moved higher. And then we stopped right around this level, okay? So we have already 3 different levels. This was the support, then a resistance here. Take a look how resistance here became a support for recent trading, especially December and January of this year, right? Take a look. And then this level here, it really became a resistance again, it was here. So this is something that it's not an indicator, it's your homework and your logic. Again, you will never, it will take time for you to realize where you put your levels. And even I cannot put exact levels because you never know. But things like that make sense, okay? And I just want to show you one interesting scenario, okay? On palladium. I don't know if anybody's trading palladium. And the reason, it's not to suggest that you trade it, of course not. But I just want to show you how doing homework, it's important. Okay. So this was back in 2020 on March, exactly 3 years ago, the instrument hit that low. Okay, approximately. And then last week it hit the same level and it bounced. So we're going to take a smaller time frame now. I just want to show you. Take a look. It did hit it on Friday and it bounced. Okay, so this is something that important to really understanding the levels and understanding where the instrument is going and where is it coming from. This way you can set up some levels, and that's very simple, you know, support and resistance level, and then you're free to use the indicators for entries, for support of your idea, for support of your strategy, and so on. And important that you understand where it comes from. You being like a private investigator, you want to see what's been happening in that specific. You know, the private. I always compare trader to private investigator. What private investigator is doing? He takes a small pad and a pen. He writes everything that that person woke up at that time. He went there. You know, he keeps statistics of it. The same thing here. If you're really watching something and you understand that certain levels didn't break, you will understand that that you know your trading will be based on. And again, there's no guarantees again, but at least it will make sense to you, not just a random entering and exit. Okay. So wow, there was a small question on candles that turned into a big answer. Okay. I sell when the indicators are moving up and buy when there is a decline. Okay, I'm not going to address that because that's it's kind of vague statement. It's probably right, but you can fit anything into it, right? So Manoj is saying, I use 30 minutes time frame. Need to know from you which is the best one as per you. Again, nothing wrong with 30 minutes, but before you go into 30 minutes or 5 minutes, or some people trade 1 minute, you need to take 1 day and see what's happening. Okay, you have to see what's happening in that instrument. Okay, for instance, you see, take gold for instance. You have 3 consecutive moves to the upside, and we hit the previous resistance, and now we having a red day. So all day this represents from the opening until now red day. But if you take 30 minutes now, okay, what can you know on 30 minutes? If you spread around few days, maybe, but otherwise, if you just look, imagine you just open this trade, and it's hard to understand if you don't get it, if you don't see where the instrument is coming and where is it going to. So any time frame is good for trading, but you need to look at the larger time frame to understand where the instrument is coming from and where is it going. And I'm going to give you a practical example. Take a look. Let's say 4 hours, by the way, it's also another bad time frame for your analysis. So what can you do with that? And take a look. It's very simple. Currently, the last 4 hour chart, 4 hour candle, as you can see, each candle represents time frame. So this one is a current 4 hour, right? So it's still within the previous candle. So what you can do as a trader, you can use, again, the horizontal price line levels, and you can just mark the top of the previous candle and the bottom of the previous candle. So this is your current channel. Okay, doesn't matter what the instrument did before. Now you're within this last candle, and then, as you said, if you're using 30-minute chart, take a look. It's already beautifully makes sense. Why? Just take a look. Now you're at the 30-minute chart. You know you're within the channel. Okay, so gold can break again. Let's go back to 4 hour charts, that just to show you what could be potential. Okay, so from here you could see something. You could see that the gold, if it breaks through the previous candle, it can go lower. If it breaks above the previous candle, it can go higher. But at least you know that you have this channel for now, for the next 4 hours, 8 hours, and so on. So when you go to 30 minutes, you have a few options. You can wait and try to buy it here. I don't know if it's not the best thing, maybe, or you can go wait till it goes up and sell there. As of now, it's in the middle of the channel, so it can go both ways. And if you're really quick, and you can go to a smaller time frame, and you can try to really catch it, because here it looks different. If you look at this chart, you might even decide to buy it here because it came to the previous support right here, almost, right? So if a trader decides to buy here at 1832 and his stop is $1 lower or $2 lower and his potential is $5, so it's nice. It's 1-to-3, 1-to-4 ratio. It could be possible, right? But don't confuse the time frames. If you look at the time frame and you enter for a certain time frame, you need to stick to it, right? So this is your channel again on the 4-hour chart, and nothing wrong with 30 minutes, but after you determine when is the next possible level of support and resistance on the larger time frame. Okay, Manoj, I hope it helped. Okay, please demonstrate how AvaProtect, take profit and stop loss. Okay, beautiful question. We're going to go into it now. Now again, AvaProtect works as of now on Forex, gold, and silver. So let's use maybe again for the easy calculation, we can use Euro USD, and we're going to try to see how AvaProtect works. Okay, so AvaProtect, let's say if you were to trade one lot, which is 100,000 units, okay. Again, this is separate thing. The value is 106,000. It depends on the leverage here. Leverage is 1 to 400. So this would be the used margin. And here's AvaProtect. So AvaProtect gives the ability. Again, you can find more on the website. You can talk to your account manager to get more specific information. I'll try to explain in a practical way. AvaProtect gives you protection for the time frame that you choose. Okay, and within that coverage time, if you lose money, you're being reimbursed, and for that you pay premium. You pay, and let's see how it works. So if I were to buy, okay, if I were to buy one lot of euro dollar here, if I want to use the AvaProtect, okay, it says right the minimum time frame is 1 hour. So if I'm now buying euro dollar and I want to be protected for 1 hour, it will cost me $75. Okay. Now, if we take 1 hour chart and we take an average range of euro dollar, let's say. I don't know why it's not showing me the. Okay, so for instance, let's say 20 pips. 20 pips. $20 pips on one lot, that's 200. Okay, so if you were to buy it now at 106.22 and you put stop loss at 106, for instance, change that. Okay, so stop loss. That's weird. 106. It doesn't show the right number here for some reason. But in any event, if you were to buy one lot at 106.23, and your stop loss is at 106. So you're risking $230 if it goes there and stop. If you're using AvaProtect and you want to cover yourself for 1 hour, and within next hour, let's say you're hoping, of course, it's going to go up and you make money, but you want to be protected for the downside. And if the downside, one second. And if a downside is about $200, you know, it's kind of attractive. Instead of risking $200, it costs you $75. Within that 1 hour, you are covered. Okay. If you want to be covered for a day, if you'll be covered for a day, it will cost you $230. Okay. And it means you can be, you know, the instrument can fall within that period of time to a loss of even 1,000, of 2,000. You're not afraid of that because you already paid the coverage. 200. All it costs you is $230. Okay. If the instrument falls below, you can close it at any time, and your realized loss will be reimbursed at that time, or it will be reimbursed at the time of the expiration. Okay, and so on. So you minimize your risk. Again, it makes sense on the larger time frames. Here, potential loss, let's say, on daily chart, euro can move 40, 50, sometimes 100 pips. So on one lot, 100 pips, that's $1,000 loss. And instead of that, you minimize your loss to only the premium that you paid of $230, right? I hope that makes sense. And of course, the stop loss and take profit is right here. Okay, yeah, the numbers are okay. I got confused with all the zeros, right? So if you were to buy euro dollar now, if you set up your stop loss 106, so $160 loss, and if you want to take profit here, let's say, let's go back to 1 hour chart. Let's say you're risking $150, and if you're hoping that the instrument will go back to 106.50, for instance, that your potential profit is 350. Okay, it's all clear. And this is the beauty of Web Trader, that you can see before. You see, we didn't even buy it yet, right? We're just setting it up. So we set up here the size. I want to buy euro dollar, one lot. I want to protect for 1 day. I want to put my stop loss 106. This is just for the example, and my take profits 106.50. And I click buy and I open the position. Okay. Okay. Thank you for your feedback, Manoj. Okay, guys, maybe we can fit another question in. Do we have any another question? Please go ahead. Do we have another question? Anybody? Okay. And again, I'm sorry I didn't type it in the same way that Daniel is doing. I just didn't know how to copy and paste the question, so I just went as we go. Okay, so I don't see any other questions coming in. And again, we had few things we went through today. We went through a little bit of technical analysis. We went a little bit through how to look for buying and selling, how to analyze direction of the market. and how to use AvaProtect stop loss. And we have one more question. What is the most affordable symbol to trade? I mean, the simple question is probably one of the Forex pairs, and the classical one is Euro USD. If you trade that, the minimum size is 0.01 lot, which is 1,000 units. Don't know why it doesn't let me do this. Okay. Let's see. And I just want to show you how much money you need to trade. Okay, so 1,000 units of euro dollar, it's same as 0.01 lot. As a traditional lot is 100,000 units. So this is the minimum size that you trade. And with the global regulation leverage, you have 1 to 400. So 1,000 units, that's what it cost you. And because of the 400 leverage, this is actually the most affordable one. It costs you $2.65 to open this position. Of course, you need more money than this to do it, to hold it. But this is something that is the most affordable one. And you need to again, as a trader, you need to see what capital you're working with, and based on that, you choose what you want to trade. But in a simple way of answering, I think this could be the most affordable one. Okay. And let's address the last question. When profit is made, can I deposit direct into my bank account, or should be kept in my Forex account? Samson, it's a good question as far as the finance goes. You know, when you again, more details you can talk to with your customer account manager or customer service, but it's a very simple way. You know, customers using or choosing how to deposit into the account. So there are a few scenarios. You can use credit or debit card, you can use wire transfer, you can use one of the e-wallets, and so on. So when you let's say, I'll give you an example. You deposit $1,000 or 100, doesn't matter the amount. You deposited $1,000 and then you made profits. So the first $1,000, sometimes 1,500, it depends. It has to go back to where it came from, something they called anti-money laundering law. So it has to go back. So let's say if you put 1,000 and you want to withdraw the money, you withdraw first back to the source. So if it was the credit card, it has to go back. If it was the bank, it has to go back there, or e-wallet has to go back there. Anything about the profits, you can choose either bank account or e-wallet to go to. It depends on the jurisdiction and your desire. Okay, so you don't need to keep. If you continue trading, of course you can keep your money on the trading account, but you have full, you and you only, you have a full control over your funds, and you can choose to keep it or withdraw it, partially withdraw it, and so on. And you can always ask your account manager how exactly it works, but very simple. Your initial deposit has to go back to the same source where it came from, and that's again for anti-money laundering law. And your profits, you can choose either bank account or e-wallets. Okay. Let's see. What's important that these are the links that you can use for educational center. Let's see if I can. If I can copy. Okay, so these are pretty much the links you can use. One second. Sorry about the technology today. So this is the educational center. You have logging and depositing, frequently asked questions, a help center. It's right here. Real Account Academy, and this is the thing that important. You can have a one-on-one premium market review if you fund your account and put the promotion code Q&A benefits. And I want to thank everyone for participating. Again, I'm sorry, I got a little bit off guard with the technical issues, so it took me sometimes to put myself together. I was a little bit in stress. And I hope this session was productive. Next week, Daniel should be back, and he will be happy to continue with you guys. And again, I want to thank you. I want to wish you lots of success. Feel free to contact us, either your account manager or customer service. If you need anything, if you have any questions, we'll be happy to help. Have a wonderful day. All the best.